stock split, Tesla Inc., stock market, Apple Inc. Why are people talking about these? Why are people talking about them? Apparently, we have here that obviously we most probably know Tesla and Apple stocks are going to be split either today, the 1st of August, or tomorrow, the 1st of September. And here Yahoo Finance or Australia, they asked, or rather they say why Tesla and Apple stocks could rise 33%. And then they went on to write the upcoming splits in Apple and Tesla shares could be a boon for investors who hold on to these tech stocks, as historically companies that have engaged in share splitting have done very well afterwards. The two tech giants are not the only mega tech giant companies reported to be contemplating splitting their shares to make them more affordable for investors and increase trading liquidity. Other tech giants whose shares have soared in the into the stratosphere are also expecting to follow Apple and Tesla Inc. in dramatically increasing their number of issued shares, with reports pointing to Amazon and Google as future share splitters. Tesla share price have risen fivefold this year. And then this is a CT Index. It's a London-based company. Apple, what levels to watch after stock split? The market capitalization of Apple is over $2 trillion, being the first stock to reach this level in the US market. In addition, Apple would take place. Apple would take place the 4-for-1 stock split after the close on trading last Friday. The stock would make its shares more accessible to a broader base of investors. And then this site Morning Brew says Tesla and Apple's planned stock splits go into effect today. Okay, there's 4-for-1 for Apple, 5-for-1 for Tesla. And what does it mean? Stock split means when a public company gives more shares to existing shareholders while chopping the price of each share so that the total value of the holdings doesn't change. A 5-to-1 split for Tesla means shareholders get 5 shares for every one they currently have, but the price will drop from 2,213 to 443. This appears, the idea is to make stock look more attractive to investors who can stomach paying more than $2,000 for one share. Why it matters: stock splits have no bearing on a company's value. The same way cutting a pizza into 16 slices instead of 8 people into 16 instead of 8 doesn't give you more pizza. But Apple's and Tesla stocks are booming regardless. Apple stock is up 30% since announcing its stock split late July. Tesla's has jumped 61% since August 11 announcement. Okay, why we are here? Okay, then the other one is this is Yahoo Finance again, but not the Australian one. The futures inched higher. The market futures inched higher on Sunday evening, indicating Wall Street will extend last week's rally when opening bell rings on Monday, as investors position themselves for a busy week while pricing in new developments in the coronavirus crisis. And yes, they talked about stock market news live update. Okay, futures inch higher and all that. Okay, and then we have this guy also, Bill Mora of Seeking Alpha, and he's saying something else. Tesla one thing isn't rising, and says Q2 revenue estimates aren't racing high. Weaker dollar implies lower delivery consensus. A low enough bar can easily be toppled. And he went on to say one of the best performing stocks so far this year is electric vehicle maker Tesla. Investors have sent the stock soaring to new highs thanks to deliveries holding up fairly well and gap profit potential leading to S&P 500 inclusion. Interestingly enough, there's one thing associated with Tesla not rising currently, which could help to fuel the rally even further in recent trend if recent trends continue. In early July, Tesla came out with a decent Q2 production and delivery report. However, street estimates were so ridiculously low that everyone made it seem like it was a massive blowout. The low bar continued into the earnings report, where Tesla revenues came in well above the street average, although anyone that followed the coverage knew that a sizable beat was likely. Tesla has only missed revenue estimates 3 times since Q2 2016, and the only major miss was in Q1 2019, when Tesla took a major one-time hit to revenues from an accounting reversal. I say okay, and he went on here to point out the implications and what the lowering of consensus estimates ultimately implies. He's saying that if the bar is low, if the consensus estimates are low, then there's a chance that Tesla will surmount those estimates. And then here also he's talking about the dollar weakness, and he's say it here. In Q2, the average dollar to euro close was a little over 1.10. If you zoom Tesla sells a vehicle that is 50,000 euros. That translates to about 55,062 US dollars. With the average close in Q3 projecting to be about 1.18 at this point, that implies about $59,000 per Tesla car. This means that Tesla is going to have a nice tailwind for average selling prices during the quarter. However, it also means that if you hold the average street estimate steady, every tick up in your average selling price assumption means a lower delivery number. For every $1,000 increase I make to my average selling price for Q3, it implies the average street delivery estimate comes down to about 2,100 vehicles. While Tesla shares are currently soaring by the week, streets analysts don't seem to be raising their numbers in stride. In fact, the average revenue estimate that has declined over the last month the average revenue estimate has declined over the last month, and when combined with a much weaker US dollar, that implies that the average delivery estimate is heading a bit lower. Should this trend continue through September, it should seemingly set up another low bar for Q3 delivery print, which could fuel the rally even further when the reported number shockingly surprises the street. Okay, so what this guy is trying to point out is that yes, while the shares keep rising, the consensus estimates keeps well, it probably doesn't rise or drops, but doesn't rise in tandem, in stride with the soaring share prices. And if that is the case, then he said here, yes, even they're even a bit lower. If they keep doing that, then there's a chance that Tesla will always outperform some of those estimates. And when they do that, then the rally even continues to continues to rise. So this down here we're looking at some of the opinions of some of the readers. Okay, this guy here has it Alexander the Great II. Based on the current estimates and a few personal projections for the quarter, the current revenue, this is what he quoted, quoting this, the author of the piece. And then he went on to ask, who's giving those numbers? Street estimate by whom? And and your personal projection. How did you come up with those based on what data? You may be right, you may be wrong. If they don't reach 500K for the year, it will be blamed on the pandemic. It will be okay and it will be forgiven. If you don't reach it, 4K to 5K per split price, maybe higher, and the alarm will be toast of the walls of the street. Okay. This guy said, what happened to Tesla losing money on every car that it sells? Narrative. The more cars they sell, the more losses they will have, right? Record Q3. What happened to no subsidies in the US plus COVID? Registrations collapsed 50% in California. Strong competition is killing Tesla in Europe. China registrations dropped in 4%. Tesla is rising because of the claims of all the all-time Tesla bears. Tesla is rising because the claim of the all-time bears, true, but making the best cars in the world doesn't hurt. Okay, we will definitely include the links to all of these sites we have just covered here now. We just made this video because we are trying to do now of late. Trying to also, update you folks on what's going on generally, not just as concerns the equity markets and the broader economic space. Okay. Thank you very much for watching this video. Don't fail to subscribe to our channel and hit that notification bell. Thank you very much.